Enrollment, expenditures, and the financing of post-secondary education in the United States have been expanding over the last decade. In the last decade, undergraduate enrollment has increased by 6 million students, from 15 million to 21 million. In the fall of 2011, half of all 18 and 19-year-olds were enrolled in college. During the same time, total spending by post-secondary institutions also increased from $338 billion to $483 billion, adjusted for inflation, or by 43%. The federal government has increased its financial aid to students over the last 10 years, reaching $146 billion in 2011. Grant aid, mostly in the form of Pell Grants, increased nearly fourfold after adjusting for inflation. Meanwhile, the total amount of student loans disbursed increased by 150%. As of 2012, the federal government owned over $500 billion in student loans. However, in the last few years, there has been a substantial increase, largely due to a policy change from the Federal Family Education Loan Program to the Direct Loan Program. Students also have access to private loans. According to the Federal Reserve, in 2012, total student loan debt, public and private and across all age groups, stood at nearly $1 trillion. Among types of consumer debt, student loan debt ranked second only to home loans and was the only form of consumer debt that has grown since the peak of the recession in 2008. But more students have been defaulting on their loans. The Department of Education calculates a 2-year cohort default rate, which is the percentage of students who entered repayment in a given year and made no payment on their loan for at least 270 days within the following 2 years. This default rate increased each year between 2005 and 2010. The Federal Reserve also tracks student loan debt delinquency. As of the end of 2012, 11% of all outstanding student loans were seriously delinquent by over 90 days. This rate is almost double what it was 6 years earlier. For more information, please visit our website at nces.ed.gov.